looking to what's happening in developing markets to see some things that they've had in place for a long time. One of our panelists is going to speak to that. A really interesting, innovative model called Your Sports, which is, I think, a very creative approach to crowdsourcing an interest in watching, in this case, Tier 2 and Tier 3 sports. And I think it's something that same model might be one that we would be able to take advantage of. And we're also going to have someone from PayPal speaking a little bit about their approach with X.com and the challenge that they've been running and how the contest model works, which I think is a very interesting model, both for PayPal and beyond. And also, there'll be two competitors from the PayPal X competition, one from LendFriend and the other from Chitai Funds. And Ron from Chitai has written and thought a lot about the whole peer financing. So just as everybody's getting all mic'd up here, I'm going to put on a little PowerPoint slide.
Okay, that should get everybody going.
Or not. We're going to look at pretty pictures. So that was a little intro to what we're doing. I'm going to let each of the panelists give a little introduction about themselves. And Ron, if we can start with you, and we're going to move right down the line.
Hello? Hello?
It'll come on in a second. It's sort of...
Hello?
Yeah, there we
Okay.
go.
I'm Ram Lakshman. I'm the founder of Chitai. Chitai is the first online internet application to run chit funds. Chit fund is a totally new concept to a lot of you folks' audience. But actually, this is a 1,000 years old financial instrument, which is very popular in developing countries. So we'll talk about this. It's a microfinancing instrument. We'll talk about this.
Hi, my name is Jason Karosik, and I work for PayPal. I lead the Developer Platforms Business Unit, which you heard Praveen talk a lot about some of our tool sets that we have to offer. And I'm going to be talking a lot about why that's important for all of you.
Is this on? Yeah, it is. I got the special treatment with Mike. I am Rob Briskia from Lending Club, Senior Director of Product Strategy. And Lending Club started in 2007. We opened with one goal in mind, which is to basically connect people to borrow and invest in each other directly, basically bypass the bank. We've been doing it for 3 years, almost coming up on 3 years. We've issued almost $100 million in loans. We just passed our market $1 billion in demand about 2 weeks ago, which was a pretty important milestone for us. And our investors are doing really well. In average, they have earned 9.65% in net annualized returns, and that is after defaults and fees. Our borrowers are enjoying rates that are typically better than those from personal loans from banks or credit cards.
Thanks for having me here, Trevor. My name is Chris McCoy. I'm the founder over at yoursports.com, and we're attacking that, called the 99% problem. 99% of the games played in America have no chance of getting on TV. And so we're changing that with crowdfunding. And the way that works is fans pledge to buy tickets. And if they buy enough tickets before a deadline ends, covering at least the basic costs so no one loses money, the game is streamed online. And if not, then the game is blacked out and fans don't pay anything.
I'm David Kuchar. I'm the CTO at LendFriend. We aim to simplify the borrowing and lending process between people that already know each other, like friends and family.
I'd like to start, Rob, with you, if you would. 'Cause I think, other than Chitai Funds, which Chit Funds, which have been around 1,000 years, domestically, Lending Club's the experienced player. Be interested if you could just talk a little bit about your model and just taking yourself out to folks in the audience who are starting businesses, have ideas. Talk a little bit about how Lending Club might be applicable for them.
Sure. So the model is very, very simple. We are issuing personal loans. So a personal loan doesn't have any collateral associated with it. So what we do is we go through the same process that a bank would go through. We check your credit history, just basically a loan application, just like a bank application. The only difference is everything is online and automated, fully automated. So you don't have to talk to anybody. You don't have to go into a branch at the bank's office. And so what we do is, based on that information, we make decisions of what rate that person deserves based on the credit history and based on the credit worthiness of that particular person. And then we turn that loan and put it in front of people like us to crowdfund. So the crowdfunding happens at increments of $25. So a $10,000 loan could have very easily 200, 300 investors in that particular loan. Then when the borrower pays the loan, so we issue the loan, we originate the loan, and we service the loan. So all the payments we receive from, everything's automated, we take all the payments every month from the borrower's bank account. And then we distribute that across the hundreds of investors that invest in that particular person. So the interest that the person is paying, the borrower is paying, typically lower than going to the bank, goes straight into the lenders or investors' pocket, except for what we charge, which is 1% on the investor side. And we also charge, the way we make money, which is the question we always get, is we charge an origination fee on the borrower side as well, which typically goes somewhere between 2% and 3.7%.
And are you seeing that for people who are starting businesses? Are they using your service?
That's correct. So as I said, it's a personal loan, so it can be used for pretty much any purpose. So we have about 60% of our members use it to consolidate credit cards and pay off previous debts that they have. It's easier, if you have 3 loans, it's easier to consolidate it into one and just pay it off in 3 years. So we're seeing a lot of responsible behavior from that point of view. But we have about, they change, it kind of varies, but it's typically between 9% to 15% loan applications are for small businesses to either boost a existing small business or create a new, for entrepreneurs to create a new company.
And in those cases, I mean, are the loans coming, I mean, I know it's the whole range, but coming from 10 or 15 or 100 people? What's typical for a loan?
For
the number of
people investing in the
number of people investing.
Typically, it's about, I think the average is about 155.
Okay.
But it depends on the amount of loans. The loans go from 1,000 to 25,000.
Okay.
So a $1,000 loan obviously has a small number of investors. But a $25,000 loan for somebody who's starting a new business could have hundreds and hundreds.
David, you've started LendFriend, one of the founders, I believe. Is that you? Yeah. And you decided to focus on a particular part of the market, and maybe you could talk a little bit about your approach, and is there an applicability for developers who are starting businesses and need to source some funding?
Yeah, there definitely is. When I started out, I left a PhD program, and I had just savings, and I had I started. I wanted to start my first company. It was like 6 years ago, and I started on credit cards and whatever savings I had, and that worked okay for me. But in the end of it, by the time I finally got profitable and it was working and all that kind of stuff, at the end of it, I had a big hunk of debt from credit cards, and it's pretty high rates and all that kind of stuff. And at the time, I had friends and family members who would lend me money, and they would give me the money. My mom wanted to just pay off the whole thing, just give it to me. And then but the problem there is, I didn't want to take the money from her because she wouldn't want the money back. But that's the specific case there.
If your mom wants to loan to me.
I know, but it's the whole, the parents, too much parents, and I actually would want a situation where it was mutually beneficial, where, like, Ma, I'm going to pay you back, and I want to pay you back with interest. So that way, it's not there's because it's mutually beneficial. It's simpler. It makes it simpler. It's not like they can hold it over on you or something like that. Those kind of more negative things. It's true that the other people that wanted to lend me money where a good friend had money, and my business partner at the time, I wanted to lend me some money. All these people believed in me as a human being. They knew what I could do, and they believed in me. They wanted to give me money, but I didn't want to complicate any of the relationships. And by simplifying the process, making it mutually beneficial, we're hoping to protect relationships. And by putting it on the books, a lot of these loans happen off the books. I think, I'm not quoting how many of these happen off the books, but by putting it on the books, it's a legal agreement, it's binding. You can take the person to court. Hopefully it doesn't come to that, but you could, and that threat and the fact that a third party is involved keeps people a little more honest with each other. Like I've had, not to hog the mic, but I've had some people tell me that like this woman lent money to her brother, and the first payment came due, and he said, I have other bills, I can't pay you. And she's like, no, this is a business arrangement. We have to, it's a real, you have to pay me back. So if we make it more official, rather than just handing people, money, I think it's beneficial.
And can you just touch on the mutually beneficial part? Just walk through how that works, how you structure it.
Well, right. Well, you can create your own loan terms. So I mean, very similar to what's lending club. Although I don't know if you guys can set the interest rates, but one of our advantages from being just one-to-one is, I guess, you can choose any kind of loan you want. And again, these are loans that typically would either happen or not happen off the books. These are people, you're coming to the table with somebody you already know who wants to lend you money. It's not, we don't do any matchmaking, and that's not where our value comes in. It's more being able to take something that would already happen and make it happen in a way that makes both parties more comfortable. Did I not answer your question?
No, you did. That's great. That described it exactly. Chris, we've met before, and I think you have a great business model. It's exciting for the idea of being able to bring sports to you. Interested to hear you talk a little bit about that, but if you would also maybe put yourself out here for a second, and you're a developer with an idea. Could your model work for somebody who's creating a software application? Could a group be brought together, and before somebody actually develops it even, a group comes together to decide whether they're going to fund that application?
Yeah. Group buying works. Groupon is a good example. Political campaigns for years have been crowdfunded through the internet. I think President Obama brought in, I think he took in 6 million donations from like 3 million people, and the average donation was $80. And a lot of them were $5, $10, and he ended up with $500 million online. And so it definitely works. I think on a high level, when you're using peer-to-peer financing or crowdfunding, you're essentially just shifting the market of who pays. And so in my case, on the content side, instead of Nike and Procter & Gamble trying to buy localized audiences, they won't. It's an inefficient buy for them. You let grandma, grandpa, local sponsor A, local sponsor B do it, and you create an entirely new marketplace. And I think if you look at it that way, it can be applied to several verticals, including software. And it's sort of a democratization of anything, and that's why it's so cool.
Yeah, that's great. Jason, you have, you're right in the middle. 3 of us have been involved directly in this competition. PayPal X sponsored a challenge. I think there was something like 690 ideas originally submitted. I'd be interested to hear a little bit about how you first came up with the idea of having a contest, how it worked, and how you see that as a good for the company and good for the developer approach to getting new ideas launched.
Sure, Trevor. Look, PayPal is actually a startup company. A lot of people forget about that, right? We're only 10 years old. And what we found in our own company experience is that action speaks a lot louder than words. And what I mean by that is when we put our products out there, the faster we do that, the faster we learn from our customers, whether they be consumers or merchants, about what they really like and what they really don't like. Unlike kind of other companies that sort of figure this out in a back room or a closet and then they go launch product, we'd rather get it out there fast. And the faster we get it out there, the more we're going to learn from our customers on whether we got it right or wrong. And to that end, we look at a lot of developers, and so many developers would come into our offices and they tell us about these awesome ideas, and all they really have is a PowerPoint. And so we think about that and we're like, all right, well, how can we help a developer, an entrepreneur, learn from our own company's success in doing as opposed to sort of thinking about it as much, right? And so we thought a contest might be a great way of doing that, in the sense that, we do have a contest going on right now. We put out a pretty big award, $150,000. We said, look, if you do something and you can show it to us and you submit it and it goes through our evaluation process, then you'll get an award. And to that end, we believe it really drives the entrepreneurs and the developers to doing something, as opposed to sort of spending your time on a PowerPoint and then presenting it to venture capitalists and trying to get funding and all the rest. Do it, right? And by the way, we think everybody who participated in the contest is actually a winner. And the reason is because they actually have their businesses up and going now, right? And so their businesses are up and going, and to the extent that they understand what we learned, that feedback cycle where your product is out in the market and your consumers are using it, even the consumer who sends you the email says, my God, you guys are crazy, or it doesn't work right, or whatever, and you take that feedback and then you implement it right back in your products, suddenly now your product is a lot better than it was before. It is true, we will be announcing the winner on Monday. There's 11 finalists of the 690, and I just think everybody who participated, to the extent they actually built something and now have a product, I think they're all winners. Really.
Can you talk a little bit, just having this great perch to see a lot of different ideas, we talked before about how the API itself works, and it really is a sort of a huge step forward. The simple idea that you can pay multiple parties, really truly, to use Chris's term, democratizes financing. Instead of having to, if you're publishing a book, the idea of having, today you go to a publisher who has aggregated money. Now with this distributed financing, multiple parties can come together and finance that same book. That's a big step. Be interested if you could, from that perch that you have and being able to see the different things that have come through, what's impressed you, what's stuck out, what are some of the trends, what seems to be coming down the line?
Well, there's two things. First, we found there's so much interest in not only entrepreneurial ideas, but payments themselves. All the things that PayPal isn't even doing, right? Certainly, we are blown away by the opportunity within payments and all the innovation, whether it be peer-to-peer lending or other kinds of lending, or we even have an entrepreneur who said, you know what, I think I can fix healthcare payments. An entrepreneur, a startup guy, came and he has got a product in the market today using adaptive payments, the suite that Praveen talked about a little while ago. And that blew us away. And we said, well, why do you think you can innovate in healthcare payments? Well, the doctors pay a 30% discount rate and wait 9 months for their payment. Oh my gosh. Suddenly now you think, well, you use the adaptive payments thing and you can bring it down from 30% down to something like 3 or 4%. And then we can pay the doctors, maybe the same day or the next day as opposed to 9 months. Suddenly this entrepreneur believes he's got another billion-dollar idea, government investment in healthcare notwithstanding. And so when he did that, what did we do? All we did is provided an infrastructure for him to launch his business. So he's out there pounding the pavement. Now, to the extent that doctors and physicians and health groups sign up for his entrepreneurial idea, the market will only determine that. I don't know whether there's a market for that or not. I think he's very bold, for example, for entering that market, when the government is thinking about maybe nationalizing parts of it. But still, that's what it is. That's what it's all about, right? I think the second part of your question really, when you think about why would we go through a detailed API at a conference like this, But I was sort of watching the audience as Praveen was explaining how the API works, and it's pretty technical stuff. But I think the power behind it is that it gives you a way of incorporating payments into all your applications, right? You don't have to go to your banker and say, you know what, I want to accept credit cards. And then your banker turns around and says, okay, here's a form you got to fill out to mortgage your house in case there's some sort of fraud. You don't do that with PayPal. You just sign up online at x.com, right? And so in that sense, you have this whole tool, this whole suite of stuff that's ready for you to use, and it works globally. It's not just the U.S. And it, so I heard a lot of the questions about the payroll. Payroll. Well, if you want to have employees in India, the Philippines, Brazil, parts of Africa, and you want to pay them all one way without doing a deal with 15 different banks, you can do it through PayPal, right? Because we provide that infrastructure. And then the second part is that whole detailed explanation of chained payments and parallel payments. And I know some of your eyes were glazing over, I noticed, but that is the power. Why? Because you as a developer can self-fund your business. And I think, Trevor, you hit on this in the question. It's if you think about, as you do a payment transaction, just tacking on your fees, as opposed to spend your time going to venture capitalists and try to get money, you launch your business and you put a parallel or chain payment in place, and you take your 4 or 5 cents per transaction, right? And then guess what? Now you got a business that consumers are using, and you're getting paid. And I just think that's what we're doing is we're providing power to the developer and the entrepreneur to go after things, whether it's healthcare payments or something else. You've got the tool set to go after it. And if you want to build a payroll application, you got the tools. I don't know, whether that will succeed in the market or not. Only the market will tell you that, right?
I think there's been a lot of. I think what's incredible about PayPal it allows you to accept cash. It gives you control over your business model, and it's something for free that you can tack on to a business and have an immediate answer to what's your business model. Instead of having to describe something that is sort of convoluted and you have to sort of stress about, you're selling stuff, and you're selling it in ways that generate instant revenue for you, which is also, I think, really significant because most of the time, there are huge delays. I mean, in everything that you try and do, whether it's sponsorships or whatever, the time from the initial conversation to the time you get paid can be months. This is something that gets you some money right away, and you can get immediate reaction to it. Is it working? Is it not? You can tweak your business model. I mean, nobody would start an Apple stand and say, well, once I've sold 1 million apples, then I'm going to start collecting the money. You sell an apple, and if you sell it, you want to get paid right away. And I think that sort of the simplicity of it is what's revolutionary about it, in my view.
I love that example, right? So if you're going to start an Apple stand, do you want to go to do a PowerPoint, go to venture capitalists, say, I need a couple $100,000 to buy apples, and maybe another couple $100,000 to build my stand, and maybe another couple $100,000 to buy a plot of land in the middle of the mall, or something like that? Or do you just put a stand out there, get some apples, and start selling them? And then your consumers immediately give feedback. Oh, I like the bright, shiny red ones. Oh, you learn, right? Okay, when you're at the store now buying the apples, you don't buy the ones that are kind of greenish, you buy those shiny red ones, right? The market is telling you what it wants, right? And the faster you get to that, the faster you get there, the more you're going to have a real business. And by the way, then when you go to the venture capitalist and say, I got this business, it's doing a couple $100,000 in revenue, man, I want to take it from a couple $100,000 to 10 million or 20 million, I need to hire a staff. I can't do this by myself anymore. The venture capitalist looks and say, what's your revenue stream? And they see that you have revenue. I mean, the whole pitch is different. And I think you'll be a lot more successful. And again, that's what, PayPal learned that. We had products out in the market that, by the way, many of you who used some of our original applications, you knew that they didn't all work, But we learned, and we learned fast. And as we learned that, and as we did it, then suddenly now, over time, we grow. And we still do this, right? So I know that every time I go to one of these places, everyone comes up to me about, this is great. They say, you know what, this product doesn't work quite right, or I need this feature. Guess what I do? That goes right back into our product planning. Every time someone tells me that. And that's where we're hearing from you what you want. And we do that. And to the extent that you build businesses and you do the same thing, you're going to be much more successful than if you just do PowerPoints.
Take a little bit of a turn in the conversation. Ram might want to talk a little bit about the concept of chitai and chit funds. And I'd also like to ask you to give a little bit of perspective on how peer financing is used in developing markets. Because I think one of the things, we said this at the outset, we've become very comfortable with the idea that money was easy to get, and it was all sort of based on credit rating. And now it's more difficult. Credit rating is not going to do it alone. And we're, I think, needing to begin to look more at trust relationships and making those trust networks operate efficiently. And I'd be interested in hearing a little bit about, go around the world and what have you seen and what works?
Sure. Actually, the Lending Club founder, he told that Lending Club started with a vision or an intent to bypass the banks. But the concept that we will talk, the chit funds, exists today in several developing countries because banks don't want to touch a major fraction of population. They don't want to touch a major fraction of population. The population I'm talking are the home-stay moms, the farmers, the maids, and these kind of people. And you will be amazed by the market segment or the amount of economy that is being turning over due to this kind of a chit fund, due to this peer-to-peer financing. You'll be, I'm going to state one statistic published by an Indian national newspaper in November 2009, stating there's one South Indian state in Kerala, which accounts only for 3.5% of population of India. There, the amount of turnover through this chit funds, this kind of peer financing, is $17.4 billion US dollars.
So 3.5% of the population and chit fund,
Yes.
17.
$0.4 billion US dollars, $70.4 billion US dollars. And then there is a professor by the name Stephen Kloner from Yale University. He has published a white paper on this chit funds. According to his research in 2001, in another South Indian state by name Tamil Nadu, the turnover in chit funds is 2.5 billion US dollars. And last year, IFMR, Institute of Finance Management Research, they have submitted a paper to Indian Finance Minister, Pranab Mukherjee, saying the amount of revenue annual turnover in another state in India called as Andhra Pradesh, the turnover is 7,200 crore rupees, which is 1.6 billion US dollars. So this is just 3 states, and India has 25 states. Besides India, this chit fund is practiced in different names in different countries, but the fundamental concept is same.
Just explain how it works a little bit.
Okay, but before that I'll just say it's practiced in China, Japan, and I have a list. Like it's called as Susu in West Africa, Ki in Korea, Senegal it's called as Trentines, Chitu in Sri Lanka, and in Cameroon, Bolivia, Ethiopia, Cambodia, Indonesia, Mozambique, and Cameroon. So these are some of the countries where it's being practiced. So how chit funds work? So it's a group of members, like friends and families and relatives. They form a network or they form a group. So every month, each member in the group, they will contribute a fixed amount to a central fund. Let's take a 10 member who are neighbors who live in the same street. They form a group, and let's say every month they contribute $100 each member. So for that month, totally they would have accumulated $1,000 because 10 people, each and everyone is contributing $100. The total accumulated fund is $1,000. So this $1,000 is given to one of the members within the group. Because
Actually, I love that because that's Susu, right?
Yeah.
That's how my mom sent me to college.
yes,
There we go.
It's
Wow.
powerful.
Actually-
I mean, this is the power of people actually getting together, putting money into a pool, and that money gets assigned to somebody who needs it at that time, at that point in time. There's no bank in the middle. There's nobody with a different interest on that money.
it has elevated so many people to get out of poverty. It has elevated so many people to go to college because these kind of people, they don't have this $1,000 in 1 month. From the daily monthly income, they cannot get this money. So,
I was going to say, I mean, just, you know, to imagine for a moment, you could see 10 entrepreneurs getting together,
Yeah.
each putting in, you know, $100 or $1,000, and picking the one or that needs the funding for right now, and all of a sudden getting $10,000 in funding to build a venture. And it's the kind of thing that you could build off of a PayPal API, and you know, it doesn't have to be 10, it could be 100. It's a way of harnessing your network and putting it to productive use, rather than waiting to get that one meeting on Sand Hill Road, which is 4 months away. You've got a group of friends who can each get together and put the money together.
And the interesting part is that everyone gets that same amount of money at some point in time.
Yeah.
So if we all get together here, he puts $100, then he will get $500 month one, month two, he will get $500. And so each one of us has the opportunity to do something with that amount of money that we otherwise would not have at the same time.
Yeah. I want to give a chance for folks to ask some questions. We can go, I'll toss in some questions along the way, but I promised that we'd start right with you.
I have a question regarding the Lending Club and LendFriend and this work. Are you going Europe or anytime soon, or is it just US based?
I can speak for Lending Club. We focus in on the U.S. for now. There are several companies that started exactly the same concept in Europe. The most famous one is Zopa. They're in the UK, and there are a few others, Poland and a couple other countries that kind of trying to basically implement the same concept. The thing about peer lending is that it's very local, if you will. Every country has a different regulatory framework for banking, for transactions, for payments, for money movements, and it's really hard to come up with something that's global. We're in a phase right now where every country is developing something different, but within the same core concept of crowdfunding. And I think there's going to be some crossover at some point, but nothing that I think is going to happen real soon. But it will happen.
Same for us. There are two things about this. I guess one is we are on the PayPal platform. We do use the PayPal API that we just talked about here. And so we could technically reach everyone. But I think, I forget who was it said it in the first panel, that you have to succeed first in the vertical before you start going horizontal. So we want to succeed first in the United States before we are going to try to do that anywhere else. But once we succeed in the United States, it's conceivable that we could branch out for sure.
Mark?
I just want to share something. There is something in Europe called mutual guarantee funds, which expand the concept of this pool of money that everybody contributes to, and then that one after the other people can have by using that money actually as a guarantee for a loan from a bank. So now you have 10 people, $100 each, that's $1,000. You go see the bank. The bank will, if they trust that group, will give you 8 times this amount or 10 times this amount, and then you can get access to that money. So, it's something to keep in mind, I guess.
Is anybody familiar? Are you familiar with the model that Mark is talking about?
Yeah, we are. We've seen it. I think it's brilliant because you're harnessing the power of people working together, but you also kind of almost intersecting the power of banking. So you have the best of both worlds, if you will.
Yeah.
The default rates on mutual guarantee funds, from what I've seen of best practices in Europe, is 2 to 8%. So very similar type of default rates as you would see in traditional microfinance.
actually, I want to add one point on the default rate. In the same report, the IFMR, they say the default rate in these chit funds is 1 to 2%, much minimal than the banks, because it's work on a trust, on a social network where people see every day. The trust, the peer pressure, it keeps the default rate to be very less.
What's interesting, I think a lot of it, we probably tend to think that we invented social networks here. Social networks have existed for a long time, and the difference is that I think in most other countries, they're much more economically productive than they are here. Because we have so focused on the model of going to the bank, going to the venture capitalists, rather than really figuring out ways to monetize your social network.
There is an author by name Simcox. In her book, Primitive Civilization, she says this network and this chit funds was existing 1,000 years before the concept of chit funds. At that point, money even wasn't even existing. At that point, they were using chit funds through grains, wheat grains, rice grains. They are trading using it. So it has been there for such a long time-tested solution.
Yeah, yeah.
One interesting thing about social networks, kind of on the same topic, we also see very low default rates on Lending Club.
Yeah.
And initially we thought, well, perhaps it's because of affinities. Because, two people went to the same school, or to the same college, and they feel a little bit more obligated to pay the loan back to that particular person because they know, even though they don't know is, Rob Garcia, they might know that it's somebody who went to school with me. So there is a little bit of that connection, but then we noticed that started to also happen for people who didn't have affinities, who didn't have connections. People who didn't go to the fact that there's somebody at the end of the line on the other side giving me $25 makes me feel a little bit more accountable to all those people that are putting money in me, the people who believed in me and gave me money at a better rate than going to the bank. So we're observing the same behavior.
I mean, it's really participatory lending. I mean, rather than it's a business decision, it's a group of people, whether you know them or not, that are working together and you're engaged with them.
If I may, it's probably harder to rationalize to yourself that you're actually defaulting on a real human being rather than a corporation that just chalks us up to
Right, there's no bank in the
Right, that's a good point. Although we did have the same assumption as you. That's interesting to think about that.
It's interesting.
Yeah, one question to all of you. Since you all believe in the power of the crowd, because you do funding with the crowd, could you also involve the crowd in terms of the wisdom of the crowd? So maybe in the example of Lending Club, or to do the due diligence process, which project should be funded, that the wisdom of the crowd comes through in that case. Or in the example of your sports, that you let the crowd decide which of the sports events you should be focused on to fund them. What's your experience in that?
Yeah, no, we do that actually. So we'll take some of our games and partner with local newspaper websites and syndicate right through the websites, kind of like recreating local television. But the way we'll do that in advance is it's a partnership with the newspaper, and fans vote on the games that they would actually fund. So it's like demand generated before the paid demand. And so we take those top voted games and we put those to be funded by the viewers and the fans. So very much wisdom of the crowds, and usually you get the best games within that local area, and it works pretty well.
Yeah, same thing happens on Lending Club. The crowd is actually deciding which loans get funded. We do due diligence to make sure that the loans we're putting in front of people are from people who are credit worthy. So we're doing the groundwork, if you will, to make sure that those people can pay the loans back. But then what we see is if you put two people with exactly the same credit score and exactly the same credit history, one person might get funded faster than the other, or this person might not get funded at all because this person's idea might not get people excited about it. Versus this person is adding a lot of detail about this is what I want to do with the money, this is how I'm going to use it, this is the type of business I want to build, and that person connects with people. We also give the investors the ability to ask questions from the borrower. So the borrower gets to interact with the investors and say, well, this is what I'm doing, and this is, perhaps I wasn't clear. And that connection is what makes the crowd more, as you say, wiser, because they decide, this is the person I want to fund.
I'd say also fundamentally, like in a lot of the peer lending, I mean, especially friends and family lending, one of the things I personally experienced is that it's very hard to get a bank loan when you have no income at all. So it makes sense, but like you go to them and say, hi, can I get a loan? Like, oh, you don't have a job. Okay. So they're not going to invest in you. They don't believe in what you're doing. And I mean, if you don't have a network, like I'm from New York, and I didn't happen to know, it's not the Valley, you have to rely on people that actually believe in you. And that's kind of similar sort of thing where you're kind of crowdsourcing in that way, but it's more of an atomic sense. Rather than the banks who don't know you and aren't in the business of vetting business ideas, like an angel or a venture capitalist. You have somebody who believes in you that can invest in.
Actually, it's even worse than that. Sometimes they don't give you the money, even though you have income, because the concept of the idea that you're coming up with might have not been done before. So the bank doesn't have a way to assign a risk level to your particular idea, because nobody has done it before.
Yeah.
So how do they know what interest rate to give you? They don't know.
Yeah.
So they say, no, we're gonna just, it's not a Thai restaurant, Indian restaurant, or Mexican restaurant. We don't know, because we haven't ever been to a, Zimbabwe restaurant.
Our developer community, by the way, votes on some of these apps that we award significant amounts of money to, and we also have our developer community choose which features we'll be able to invest in. So in that sense, our crowd is really governing how PayPal moves forward.
And so that works in practice for you. I mean, the idea of which features to go with.
So chits rely on sort of an explicit or implicit social or cultural contract to lower the default rate in essence. And I'm interested because you would say at the same time that sort of crowdsourcing is relatively effective as well. Can you compare and contrast the default ratios between the two? I understand why chit would have a relatively low default rate, but does crowdsourcing actually work through explicit data? Like, can you look at it and say, wow, the default rates are relatively similar to a much more tightly bound relationship that minimizes risk?
Yes, and in fact, one of the things that we do is we're completely transparent. You can actually download all the data from Lending Club's website and do your own analysis, but we calculate the default rate daily, and I think as of this morning, I think it was 2.7 or 2.6 something %, and that's annualized default rate. So it's not as low as chip funds, but it is it is trending lower than the overall population when it comes to banking and financial services.
Yes, I have a question, a little bit different, but for example, foundations and grants, I think, usually like for non-profit organizations, but there's also those for profit organizations. And do you have any connections or suggestions where we should be looking?
So this is Jason again. I would, again, encourage you to build whatever you're going to build. The amount of time you spend applying for grants, although you don't necessarily have to pay those back, is time you could be spending building your business as opposed to getting a grant. Now that said, there are lots of lists online of places that you can go to get money.
Yeah, or if you require like clinical studies to fund those kind of things, for example.
So let me just say it differently. If PayPal had spent millions of dollars trying to study whether person-to-person payments would work 10 years ago, we could have spent that money building the product or researching whether or not there's a market for it. Instead, we built it, we got it wrong 3 times, right? Because each time the market told us, hey, doing security on Palm Pilots is not what the best thing is to do. Okay, doing person-to-person payments on Palm Pilot, that's great. People loved it, but then we lost a ton of money, right? Oh, buying on eBay. Oh, suddenly people were willing to pay us 2, 3, 4%, and people love it, right? So if we had done a grant, which we probably could have gotten, to do a study on what kind of payments people might want to do, we may or may not have gotten to payments on eBay, because we learned from the market. We learned from the crowd.
Also, things like Kickstarter, are ways of democratizing grant making. And 1,000 people can get together and each put in $10. And I love looking at the site. I mean, there are things which would not appeal to the Ford Foundation, but appeal to 150 people, spread out all over the world, and the person gets the money that they need. I mean, it's long tail funding.
And actually, Cheetah is a good example for what Jason told. I got inspired because of this PayPal developer challenge, and then I built the application. Just talking 3-4 months, and it's in the finalists now. the PayPal penalties?
I think we sound like Moonies about this, with no disrespect to any Moonies, but about talking about this PayPal challenge. But it's really, I think, been great for us because one of the things that's happened differently, whether you win or lose, you end up with the product that you wanted to build. And you pick up a little bit of PR, you get a little bit of attention from it, and that's all great, and maybe you get some money out of it. That's great, but I also found, just as a framework, just to even outside of PayPal challenge, if you're going and building something, create a contest for yourself. I mean, create rules and deadlines that you have to get things done by, because we would never be done with this thing. I mean, we would just be, it would be 6 months away, it'd be a great idea, and I'd come to a conference like this and get some suggestions and start building, and it would grow bigger and bigger. Because we had a little bit of time, we had to get narrow and tight, to Dave's point, and we had to get a vertical. We couldn't pick 3. We couldn't get the legal agreement for, what we've created was really done yesterday. I mean, the really sort of final version of it. If we had done 5 applications, it would have been, forever.
And the reason why I really focus on that, and I know you guys are probably tired of hearing of it, all the entrepreneurs I've met, all the developers I've met, they're intensely creative people. They're probably the most creative people I've ever met, right? And when they come to PayPal's offices, as many developers and entrepreneurs do, what happens is they start talking about their ideas, and they're all excited about their ideas, which is great, because if you're not excited about your ideas, it doesn't matter, right? But then, the gap between the idea and the excitement about the idea and then having a business, that is a big gap. And so to the extent that you go to a foundation and try to get money so that you don't have to have a job, it's sort of like secondary, right? If you're really excited about this idea, just do it.
Listen, I'm going to sound like a Mooney too, but the reason why I got excited is I went to the conference, PayPal X conference, and I got excited there because you say there's a lot of innovation in the Valley. I would say there's a crisis of innovation in the Valley. There's nothing going on in the financial services, at least in that particular industry. And PayPal at least took a very strong step towards basically enabling people to create things in the financial services and payments. I would like to see that more from other companies. I would like to see banks. I would like to see financial services companies enabling people to create things. I would like to see more people here in the audience just kind of come up with ideas and start working on them.
And it was a great, I went to that too, it was a great conference because it was self-interested. I mean, you go to these conferences and people are in the business of conference making. And so, it's like, and there are all these, cost thousands of dollars, and, it always sounds like they're going to be interested speakers, and, there's some VC that you want to go, and you run up to get the card, and he's like, sounds great, send me a plan. And nothing's ever going to happen. But, at this, PayPal was doing, you could see what their reason was, you could make a decision whether you wanted to, attach your boat to it or not, and it was very effective.
I mean, one more comment about that. I mean, for me, it was a very humbling experience because I think of myself as a payments expert, right? And I'm sitting here thinking PayPal has a lot of resources, a lot of product managers, tons and tons of engineers. I want to go out and build payments products, lots of payments products. But to say, nope, what we're going to do instead of building payments products is we're going to open our platform so that everybody in this audience, everyone on the stage, anyone in the world can then go and do their entrepreneurial ideas. That's a very humbling statement to say, the door is open to all of you. And everyone who's on the stage, to even Trevor, you have your app, right? And to build apps, do it.
I'm going to take one last question and then tell you about prizes coming up.
I just want to go back to the comment on the grants and stuff. I mean, to be fair, I mean, what you're describing is very good, and I'm all for bootstrapping and everything. However, if you do science, sometimes you have this requirement for grants. And there are very good resources actually, because it comes with very little strings attached. I mean, you can get up to $500,000 just by filing these things. The success rate of these grants is usually higher than whatever success rate you would get from going around and trying to get VC money. I mean, it's more like the 30% than the 1%.
So again, I guess I have to comment. So I also teach a course at Case Western Reserve University in Cleveland, right, on payments. And they were like, hey, do you want to get some grants on payments, right? And I'm like, well, how does this work? And then I walked into their office, and they had 40 people. 40 people. And what they did was they literally saw all the grant applications, and they're filing applications on every grant, linking them to professors and everything else. And then I'm thinking to myself, gee, if I want a grant, how do I compete with a university that has a whole grant writing function to go after the money from the government? Now, is it there? Absolutely.
They have actually two different, you have the academia and you have the small business grants. And that's the good news. The small business grants, actually not that many people from the business side are familiar with the grant process. So that's where you have a little more of a chance.
What we're saying though is that in the past, you have to go through an institution to get that particular grant.
Now you don't.
We all go and give money to the Red Cross, and the Red Cross is saying nothing against the Lord. I think the Red Cross is doing a fantastic job. But we all give the money to an institution who decides where the money goes. What the power that you have now is that you can go into websites, into your social graph, into your social network, and get the exact same grant from a bunch of people who are interested in what you do it, and trust that money to you. So that option didn't exist before, and you have it now.
No question that this is lots of value.
That's all time. I'm sorry.
Sure.
Thank you very much, guys. This was really, really interesting, and I hope it was interesting for all of you. So thank you very, very much.
Thank you.
Here's the next little bit. I wanted to share for whoever is interested, appbackr, the presentation, the application that we prepared as part of this challenge. I'm going to do it very quickly because we ran over on some other things. Give you a chance to look at that. Then we have lunch, and I want to just very quickly touch on lunch. One thing is we are going to, we do have some prizes that we're going to give, some $100 gift certificates that we're going to give away, so please stay for that. That's our grant making. The way that lunch is going to work, when you came in, we asked you to identify yourself in one of 4 groups. And we're going to, when you go into the lunch area, you'll see there are big signs up, and I'd like you to go into one of the 4 groups. And Robert is going to lead you through some questions. What we want to basically try and do is capture some of your thinking for how we can, how others can, take some of the ideas that would be applicable for your verticals and put them into peer financing tools. We have an agenda here, which is we want to keep in touch with the group. We're twittering the hashtag PFIN for peer financing. We hope that today, especially tomorrow and beyond, that people will communicate through there. We're doing another one of these conferences in New York, and we want to do another one here coming up where with the evolution of what we've taken from the thinking and ideas that we've had at this conference. So please stick around for lunch. We have a really good sandwiches and stuff, and I think an even better discussion, and we will get everybody out by 1:30. So if you're interested in seeing a little bit about appbackr, I imagine some people will want to go and take a stretch, but if you're interested, come on forward and I'll show you what we'll